talk about that tomorrow. Okay, yeah, I'll need to have a box of tissues handy though, so when I relive the maudlin parts. But yeah, I want to mention a couple of things that are going to happen for the rest of the workshop also. Again, just a reminder, Carlos is going to be here for the technical aspects of Fibonacci Trader, 8:30 tomorrow morning. Again, I'm just saying it again now because I might not have been heard clearly before. You want some help with program setup, program issues, come in here then. If he needs to spend time with you alone, that'll happen too. But it's better also if it's a group situation. You don't, a lot of the time I've seen someone take Carlos to the side and say, how do I open a chart? It's like, well, you can ask that in the room and it can be answered for everyone. So that'll be a good opportunity for that. Also, I think the rest of the day we're going to talk about this stuff. I really want to get the nitty-gritty out of the way so we can get into some more interesting things tomorrow, because what's happening though is some of us feel that way and other people are telling me that they're hearing a lot of the stuff for the first time. So I really want to just bring it all together for everyone. So tomorrow I have a little assignment for you guys to start thinking about now. One thing I want to do tomorrow is run some charts and go from start to finish on interpretation, some situations in the past, and the current situation. Maybe a few, whether it's a few currencies, a couple of stocks, a few things. So what I'd like you to do maybe is think of some symbols that interest you. And the reason I'm saying that is I know there are a lot of Forex traders here. There are also people, that's why we sent out those questionnaires. Some people wrote to me and said they are longer-term stock position traders. So I want to give them an opportunity to see this applied to their stuff too. Think of some symbols and time frames, and I'll pick a few. Okay. In other words, if you could just write down something or mention it to me before we break today, that way I can have the charts set up before we start. The charts loaded, so we're not sitting here waiting for the data to come in. I'll just load the charts. We'll pick 10 symbols or something. So please, think along those lines. Tomorrow we're going to talk about the triggers that I use and look at a couple of alternatives as well, because the triggering to me really is one of the least important parts of this. Well, are you agreeing or you're asking?
I'm asking.
Okay. I'll qualify that a little bit. I don't use the triggers just to trigger. All right. The triggers for me. Remember I showed you that little trick with the 100 line? That wasn't a trigger. That was using the momentum indicator that I like to give me a warning. But the actual trigger that you use, I'm not saying the concept of a trigger isn't important, but the actual trigger that you choose to use, the indicator, for example, is not as important as making sure that you're following what it's saying in the right place on the chart. So in other words, for me, it's CCI to trigger. I have the 4 triggers that we will go over tomorrow. But for someone else, they might, for their eye, a MACD might be better. I am not saying that you got to use the CCI for all this stuff to make any sense to you. I have plenty of people, I know plenty of friends, plenty of people I work with who are using completely other triggers. When I talk to them about the CCI, I use it to talk more about warnings and trend determination. Okay, so that's basically what I'm saying. I mean, you could trigger into one of these trades as long as you're taking it in the right place using CCI or using a moving average crossover. When will a moving average crossover system kill you? When you're in a choppy market. Okay, so what are we trying to do here with the fib work? Determine whether we're in a choppy market or a trending market, and is the trend being maintained? So if we can define that, moving average crossover is going to work, I promise. I just like CCI, and I've spent a lot of time refining the nuances. You might want to, if you're more comfortable with a different indicator to actually get into the market, you might want to use one of my CCIs just to see the strength of the trend, which is fine too. So we're going to talk about that stuff tomorrow, and then we're going to get into some things I've learned about trading psychology, which will be quite different than the trading psychology stuff. I can't pretend to be Mark Douglas. I can't pretend to be, a trading psychology expert for that stuff. But I can tell you some things that I learned, even if it meant that I was banging my head into a brick wall, and had to overcome some stuff with that. And we'll go into that tomorrow. We'll go into the history, my Mark's history lesson, as I said. Monday, we're going to have 2 screens up. Okay, we're going to have 2 screens up. I'm going to break out the other projector because I want to have a bunch of live markets running. And again, I don't want to focus just on Forex or just on something else. And the one thing I really don't want to do is keep flitting around and changing the charts on the screen because that's very distracting. And and so we're going to have 2 charts up. Anyone with a PC, with a laptop, is set up to run Fibonacci Trader. What we'll do is we'll see what's going on the charts, and we'll take little breaks from that, and I will be joining you guys out there to see, if you want me to see if you're doing this kind of analysis work correctly. Drawing the lines, yes, but also interpreting them. All right? So that's the idea. Monday should be really, really interesting, and we should, hopefully we'll be all up to that point by the end of tomorrow. Sorry?
So we already mentioned 3 minutes chart.
Yes?
I get very nervous.
3 minute chart. What time frame do you like? What time frame do you like?
Higher.
Yeah. Well, you know what? When I say 3 minute chart, I'm trying to draw extremes. That's why I'm saying that. I don't look at 3 minute charts on the currencies anymore. I'm saying 3 minute chart because what I'm doing is drawing the comparison between the work is the same on a weekly chart as it is on a 3 minute. When I started, as I mentioned before, when I started trading Forex, when I was really into it, by the way, I haven't exactly backed away from it. I'm working more towards being comfortable with longer term swings in it. I was trading it very, very rapid fire off a 3 minute chart, 3 and 15 minute chart, when my life was in a little bit of a different place, and I was better off trading at night. Okay, so some examples that I've collected are trades on the Asian markets and stuff. When I got a little older and decrepit, and had to take care of older and decrepit family members and so on, it became better for me to hold like a 9 to 5 kind of life, But I was doing the 3 and 15, and I can tell you the work is the same, the triggers are the same, and so on. We'll figure out which time frames we want to look at on Monday. I think if I have a bunch of 3 minute charts up, I doubt I'll be able to keep them properly updated, explain them, and work with you all individually, too.
Do you use a 3 minute on the ES now?
Yeah, I do because that's a little bit of a different story. Those of us who are focusing on the ES a lot of the time, yeah, okay. Well, the YM is fine. I was using a 3 minute chart for that for a long time too, but. Yeah, there's enough activity on the 3 minute ES. Also, a lot of the time what we're doing is we're using that chart as a counterpoint. In other words, our actual setup is based on a 15-minute price pattern. Yes, and all we're looking for, because that's the entire concept behind my trading, is that we're looking for the alignment between the shorter time frame and the higher time frame.
I explained before, you're looking at 15 minute, actually I look at the 15 and the 60.
Right.
Those trends should be in alignment. And then say if they're up, then you want to take long trades.
Right. So one way that they can be determined to be in alignment is we look at the 15 setup. Okay. The 3 minute at that point is showing a downtrend. So when we have the 15 minute, if you were just looking at the 3 minute chart, at that point approaching the 15 minute setup, the 3 minute is going down. Right? So on the 3 minute chart, we have resistance. So what we want to do then, 15 minute support is met, 3 minute resistance starts to break. And then you have the time frames aligned.
That's why Nicholas would, prior to this, I know you used the 15 and the 60 for trend information only, for support and resistance. And when you draw your retracements and expansions and the other stuff, you get a better idea how to look inside the chart.
Right.
The 15 and the 60.
Right, exactly, yeah. So that's in case that wasn't clear to anyone. That's really the focus of what we're doing with all this stuff. That's why we look at multiple time frames, because we're looking for the trends to come back into alignment. That's where a lot of people get in trouble with their trading, is they're not looking at the bigger picture. So they're seeing a 3 minute chart, or if 3 is a scary number, they're looking at a 15 minute chart or whatever. No, because it's really the same thing, but they're looking at a 3 minute chart and it's showing a downtrend, and they short. And what they don't realize is if they looked at the 15 minute, it's showing that it is at a retracement area in an uptrend. And they take the short and they slam right into that support and get stopped out and go, what happened?
Yes. Have a market order waiting, like if it's hitting the and the trend is long?
I don't. Other people do.
Full market long?
Yeah. Because usually what happens I'm very conservative in my own intraday trading. I'm very conservative, more so than a lot of the people who work with me. Other people will get in faster than I will. What I generally like to see happen is a confirmation that the pattern is shifted. In other words, I have that 3-minute res and it starts to break, holding the 15-minute support. I like it to pull back a little bit and hold new 3-minute support.
Oh, so you're waiting for that candle or that?
Yeah, exactly. And then when it takes off from there, that's the trigger I'll take. So since I don't know what that exact number will be in advance, I can't have a resting order. I can't have something waiting like that.
When you have that number when you have that number identified based on your Fibonacci?
Yeah, but not that early. Not exactly when it starts to break the 3-minute res.
Oh, okay. I don't work. The lowest I go down to is 5 minutes.
Oh, 5-minute or again, even 15. My point is that, let's say here, let me just try to draw something here. What we're talking about is coming down, again, it doesn't matter if it's 15-minute, 60-minute, whatever. You have an uptrend going on, okay? You're coming down to that support. Your shorter time frame at that point obviously is showing a downtrend, right? So I think what your question then is, if you go down to that shorter time frame, you break the res, can you just have like a stop right above that to get in? Sure, you can, but my psychology makes me want to be a little more conservative. So what I need, just for my own trading, what I need is it comes down to the 15-minute support, you start to break the 3-minute res, and then it pulls back and holds a new 3-minute retracement level. Okay, so at the point of the res break, I don't know exactly where it's going to hold on the first pullback.
Are you basing your, I get ahead of everything, but then when you take your product, depending on whatever you're trading, if your entry's off the 3 or the 5 or lower time frame,
Right.
is it more like a scalping trade?
No. What we're trying to do is take the entry on the shorter time frame, since it's in alignment with the higher time frame rejoining. We're trying to ride the higher time frame trade.
So
okay.
and then do you take into consideration the ATR and anything?
No.
You don't. You're done. You don't look at it.
I used to, yeah. I mean, I think ATR is great. I used to use the chandelier stock, by the way, a lot on the on Forex. It's a good, the chandelier stop is hanging for, yeah. It's partially ATR calculation. It's great. It just doesn't. It's not something that calls to me particularly. I get enough information on that kind of stuff from the CCI because
So you just have a super clean chart. You just look at support, resistance, Fibonacci trend. That's it.
Yep.
And your CCI.
Yep. Yeah, so that's it. As far as where to take profits, it depends on where you are in relationship. You know what? Let's wait until we have some charts up on that. Because what I'm trying to say is if you're in the middle of the 15-minute trade and it pulls back enough to stop you out, for example, hopefully after an initial target, and then you get back in based on a short-term trigger, then I might be looking at the short-term target. But if you can actually get in close to the retracement on the higher time frame, you're trying to use that 3-minute to pinpoint the entry on the 15-minute setup. So the point is then you're looking to the 15-minute targets. Okay? I think that covers that. All right, significance of each retracement. Your notes go here. See, I told you it was a workbook. This won't take too long. 236 level is weak. It's a weak retracement. To me, when a market pulls back to 236, we still have to Google exactly where that came from. 0.236, in other words, 23.6%, yeah. It really most likely is not enough of a pullback. The reason I say most likely is you will on occasion see it hold. If it does hold and you get another push in the direction of the trend, it's probably the last push you're going to see. It's like an exhaustion move. All right, everyone clear on what I mean there? I guess someone is. No? Okay, actually, let's draw a retracement. Okay, let's find something that's exhausted, other than all of us from sitting here. We'll take this big guy. Okay. These retracements you're seeing, this is our Euro 3-minute, sorry. This is from this major high to low. Here is a 236 resistance retracement of this swing, okay? What I'm saying is the 236 level, if it's standing there by itself, is a pretty weak level. If you just see a 236 and then all your other res is up here, likelihood is that when you break through, that when the 236 is tested, it's going to break. The 236 level being the only thing on the chart close to price is telling you that that market is fairly extended, fairly overextended, and it's probably going to break back upward. If instead it does hold and you get another push down, it's probably the last time you're going to see a push down before more of a correction, more of a bounce in this case. Okay, yeah.
Weak would be
Easily broken, but also if it stands alone, it's a heads up that you're probably going to get a pullback. Right? If I can't put a whole bunch of other things by that 236, the market it's giving you a heads up that the market has moved too far, and it's probably going to pull back. And I saw a hand raised.
What do you mean by a bunch of other stuff?
Overlaps of other levels, 786, 618. Symmetry directly overlapping on 236 has a better chance of holding. I still would consider it, if you only had 236 and a symmetry level, I still would consider it fairly weak. I'd rather see, if there's going to be a 236 there better be a clearly defined swing to also get you a more major level, like a 618 or a 786. That's what I'm saying, weak versus major, minor versus major, because you can put under 236. It's only good for a hold if it has another major level. And then when I get to talking about the major levels, I'll tell you, these are major levels. You understand what I'm saying? What?
And when you say it's exhausted, you mean that the market could be actually turning on the next move?
That probably the next move is going to be the last time you're going to get a push in that direction. Yes. Right.
Trend change.
Yes. Trend change, or at least a more substantial correction. You understand what I mean by correction? Correction means against the trend.
A deeper pullback.
Right, exactly. Yeah, I tend to use the word correction because it takes a pullback. A lot of people associate a downward move, downside correction. Correction means either way. You know, if you have a downtrend, a correction is a corrective bounce, and so on. I saw another hand raised. Yes.
Mark, can I come up and have you interpolate what 236 actually means for me? But I need to come show you on the screen.
Sure. Drum roll.
Okay, so this is the 236 rule that you're talking about.
Yes.
Okay, so where's the 2, where's the 3, and where's the 6, and what does it really mean to me?
Okay, where's the, move your head. 236 is here. It's all the same. It's 20, see that number?
Yeah.
23.6. They're not, it's a percentage. Yes, exactly.
This is for all the stupid people in the room that don't want to raise their hand, but I'm the stupid one, so I need to.
Okay. It is 23.6% of this swing.
Now I understand.
Okay.
Thank you.
Yeah, that's why I asked. That's why I asked first thing a while ago, who hasn't worked with Fibonacci retracements? Because not that you should have answered then, but 236 refers to.
You must love it when somebody finally understands what you're talking about.
Am I that bad? Am I confusing people?
Like that. But it's just, hey, I didn't catch it before, and I didn't know it.
No, that's fine. That's fine. Well, like when I've been saying 618, that refers to one level, 61.8% of the swing being measured. Okay? Some software would label it as 0.618, others 61.8. Carlos has decided to confuse us by having it both, depending on where you're looking for it. But these are standard Fibonacci retracements. 236 is a little bit more out there, but standard Fibonacci retracements, the ones that I showed you in the setup of the tool, retracement tool, is 50%, 618%, 61.8%, 0.786 or 78.6%.
And each particular pair, whatever it might be, has a particular retracement percentage and upside percentage as well.
Every single thing that you can chart would have retracements on it. There's no number assigned to any particular currency or anything. When we're doing like this 3-minute euro chart, you'd do the same. You'd have the same appearance. That's you'd have the same thing.
I think maybe, Richard, you need to come at, it's the difference between the high and the low, or the low and the high
Right.
move, and it's a multiple, it's a percentage of the
Yeah.
quantity of,
Yeah. You know what? Let me erase the stuff on this chart, and we'll try to do that.
it's just a formula, and those are the levels.
Here, if I turn this baseline thing on, it might make it a little bit more clear. Yeah, you can if you want to have no time to trade.
Yeah, used to be you had a calculator.
Yeah, actually, I think it's a good idea. Here, that didn't turn on. Yeah, but I'm looking for. Oh, I think it's out of the. Yeah, this doesn't have the show baseline anymore. That's why I was looking for the show baseline. I will use a Trendline. Here, what we're looking at is the high up here. You see where I'm drawing from? To this low. And all these numbers are percentages retracing back towards that high. Yeah, this is 23% back up, 38%, 50%, 61% and change, 78% and change, and so on. And the targets, assuming that's all broken through, is what we were talking about up here. 1272, that means 127.2% of that swing. Okay, those are all percentages or multipliers. If you were going to do this in a calculator, you would take this value, you'd take this price minus this price down here, multiply by 0.618 and add it to the bottom part. You'll end up with the same thing as what you're seeing on the chart.
Mark,
Yes.
I found in Investopedia,
Yes.
Choppy derived 236.
Drum roll again.
You take one number and divide it by another number 3 spots to the right.
Okay, well,
Divided by 34.
I'd like to see an explanation more. I'd like to see an explanation. No, I know there's a easier method like the one I had up, like where the 786 comes from.
And square root and everything, and I'm
Yeah.
getting 618 and 1.372.
Yeah, there's another explanation for it. I just happen to have forgotten it. And you see, that shows how much I don't put much importance. I don't ascribe much significance to that level. Yes, did you?
I may be stupid as well.
Don't be. I'm
No,
not.
I
Yeah.
don't want to be stupid, but we have a downtrend over there.
Okay.
Is it because we hit the lowest 23.6 that now we can see a reverse in the trend?
No, actually.
In there?
No, actually, this may be a downtrend here.
Yeah.
But we didn't hit it, we broke it. So yeah, that could be a first indication that you're going to get more of a corrective or more of a bounce, certainly.
Broken. I mean, the line was.
Yes, yeah. I would want to do other types of analysis on this chart in order to determine whether the pattern had actually shifted. Okay, right now, I'm just trying to clarify the retracement stuff. If you'd like, I can stop what I'm doing and we can talk about verifying this to the upside. But the thing is, we're going to have plenty of time on that tomorrow and Monday.
Could we say that if we go as low as 23.6 like we are now, there's a big risk of something happening
Here?
in reverse?
Now, once a level is broken, it gets erased from the chart. Coming back down to test this is meaningless.
Oh, yeah?
Yeah. Fibonacci work it's not like a pivot. Broken resistance and fib is erased. Doesn't hold from the other direction. If you want to see the support in fib, what you'd have to do is take this low to high, and then you'd have support retracements. Okay? You don't, yeah, well again, remember today I'm just trying to get you guys into the basics of the tools that I'm using and the significance of these lines so that the next couple of days we can talk about what they all mean in action, okay?
Because it's easy now to see that the pattern is there. But
Okay.
if we didn't have all that right portion over there, then that low to the high
Yeah.
would give us an indication about the support.
Yeah, well, to be honest with you, just based upon this retracement, this one thing drawn on here, I'm not willing to say that the trend has changed until we see what happens with this 786 level. Okay, it could just pop up there and then go right down again, because that's our obstacle.
As it did just on the left side.
Yeah, it's done that in a couple of places, but if I were going to analyze this from the standpoint of are you going to buy or not, I'd be going back to the beginning of how we started today, and I'd be running symmetry support, high to low from high. If you got a hold there, you might have had a buy. Okay? What I'm trying to say is the information on this chart right now is not enough to make that determination. This is just so we can talk about the meanings of these levels. So it's a good question, but I can't answer it based upon this data. Okay? Yes?
Can I say something for when I see the retracement? If you come to your 50% mark, and how you get to the 61.8 is there's an OR 11.8 to the 50%, up to 50%, and 11.8 down. That's how you get the 38.2.
Okay, Leonard, I think you might be talking about something that you've discovered that works for you.
No, that just
Okay, no, but it's nothing I ever heard of before. Yeah, it's nothing I ever heard of. I mean, it's great. It sounds interesting. And so you're saying you're saying to give that level a certain leeway.
well, that 61.8 is the OR of the 50% retracement. So it's up 11.8, and it's also down.
Oh, 11.8. I see what you're saying.
11.8, so that
Okay.
makes it 38. Or
Right. Okay. Well, you know what you might be doing is on what I would have here on this chart, again, would be this low to high, also to track how that's doing on the way down. Okay. Similar idea. Similar idea. Okay. Was there a hand raised back there? Yes.
On this chart, when would you actually apply the symmetry? When the instrument reaches the 78%?
No, I'd be tracking it the whole time. I mean, in other words, all the way down. Here's, by the way, this might help to answer your question about trend change. On the way down, we'd be doing our symmetry resistance. Low to high, from here. Those levels would have been broken. You can tell that just by eyeballing it.
Yeah.
Okay? So that would tell you that the pattern is shifting. And then, once we start to form new swing highs, high to low from high, and that probably is a hold. We can take a look. Did I hear something?
I was just gonna, I realize this isn't a chart you would trade from, but if it was, you would have already drawn your Fibonacci.
This would all be done in advance.
Right, well, you would have drawn your one to the left of the chart anyway, your low to your high, right?
Right, yeah.
And then you'd have some overlaps at that point, and then you could work.
I just made a mistake. Yes, I really literally just put this chart up so I could have it. Yeah. But yeah, definitely. Oh, I'm not being nasty. I'm just afraid that I am. Yes, here. Look at this. Confirmation of the trend. See this? High to low from high. So what did we have at this point? We had the symmetry resistance break, and then the symmetry support hold. Okay? So that's how I would do it, and that's why I couldn't answer based on the 236, because it's not the way I'm analyzing it. All right. At this rate, we're not going to get to talk about 618 until about next week. Oh, no, that's okay. That's okay. 50%. No, 382. Important one. 382. If the market is strongly interested in continuing the trend, it will hold it at 382. There are people who, now break of the 382 doesn't mean the market is reversing, but there are people who will get into a trade and they have all kinds of indications on their momentum-based indicators and whatever that it's a strong trend, and all they'll do is trail the stop on the other side of the 382 until it hits target. And if you go back and you look at some strong trends, actually I want to put that 382 back up here.
Could you repeat your first sentence, please?
If I can remember what it was. If the market is going to maintain a strong trend, thank you. If the market is going to maintain a strong trend, it's going to hold. It will hold at the 382, a strong trend. 382 is a good level for that. We have a lot of times we're trading intraday, and we go, you know what, this is a strong trend. And it could be anything we're looking at in the chat room, for example. And we have, things that we're looking at, time of day, whatever. We could expect a pause, a pullback. Give you an example. Strong trend day on the, who's trading ES? Okay, strong trend day on an ES, on the ES, morning, it extends. One of the ways we determine it extends is we hit some kind of extension target. What happens over lunch? Consolidation. Look at a trend day like that. Look at how often the 382 holds over lunch. Comes down to the 382. I know people who would put their stop under the 382 and go and have lunch. And they're like, well, if the stop was hit, it wasn't a trend day. They still made something on that morning, the morning move. Very, very, very often on a strong trending move, the 382 will hold. In other words, to me, that's the psychological point, mass psychology, where everyone is like, yes, go, yes, go, yes, go. And it will hold and it will reverse there. Stronger, of course, when it has the other things overlapping it from other swings. One of my absolutely favorite combinations of two levels, really simple, 382 from a larger move and 786 from a smaller move. When we get to talk about 786, I'll tell you why, because I'm going to repeat this basically, but that is a very powerful combination, 0.382 and 0.786 retracement. Let me just show you guys what that means in case anyone's in doubt. I might be able to, well, I can at least, what I'm saying is, the 382, in this case, obviously the 382 did not hold. But what I'm saying is, let me just turn that back on. Actually, I have some examples where it did hold. Let's say from another swing, you see this 786 level from the smaller swing? Smaller meaning, it was this next high to low. Again, this is high to low, that's 78.6% back up. If that 786 were overlapping our larger swings, 382 retracement is very strong. Okay? We're all clear on that? The percentages I'm talking about, this is a percentage move.
The resistance going up?
What?
Very strong resistance.
Resistance or support pulling back, yeah. So I'm talking about two different, I'm talking about, there are some examples I probably should have brought along based on that. I actually gathered a whole bunch of stats on that, and I saved the charts to see how often it works out. It works out very well. So I'm saying, we're talking about drawing two retracements, high to low, and if you have 382 from the larger one, 786 from the smaller one, and it lines up together, is very strong. Okay? Someone asked me over the break what I thought. There's some software that does a lot of these levels automatically, and a lot of the fib levels will show up on the chart. You don't have to do this stuff with drawing and all that stuff. But the problem for me is that I need to know where those levels came from, because I have discovered, I put in the man hours and dog hours and everything else into discovering 382 and 786 together is extremely strong. But that is 382 from a large swing and 786 from a small swing, and I don't see any software telling you about those kind of nuances. Hey, you really have to watch this level. Best I can do is stand here and tell you guys about the things I've discovered with it. So that's how important that is, that combination is. 50% is okay. 50% retracement, it's not actually even a fib number. 50% is used because it's half of 100%. And a lot of people, admittedly, a lot of fib analysts will tell you, we're looking at 50% because a lot of people are looking at 50%. 50%, remember I mentioned a couple hours ago, I mentioned that there are some markets that behave a little differently at different fib numbers. I was thinking primarily of the 50%. Like 50% standing alone is pretty good on currencies. I think probably because a lot of people are looking at it. 50% number is good on currencies. 50% number on the ES doesn't really mean that much. 50% number on YM does. Go figure. The YM is the mini Dow. Okay? So it does. And even up on the daily chart, you'll see me, when I do dailies, if I have a 50% level outstanding and it's on the S&P cash, it's not going to be there. And then, number alone, 50%, if it's on the Dow cash, it will be there. So little things like that. There aren't that many exceptions to the rule on that. I mean, not that many places where you'd vary it. In general, 50% level standing alone just doesn't really mean that much. You can use it as a confirming factor. What I mean by confirming factor is you have a couple of other levels kind of hanging out there, that are, you might have 50% level and you might have a 618 from a smaller swing overlapping it. That's going to be a little stronger than the 618 alone. Okay? A little stronger. If it's overlapping and reinforcing, it's nice. But alone, I certainly wouldn't base a trade off it. 9 times out of 10, yes?
I thought earlier, I know you're using two retracement level on the same time frame.
Yes.
But I thought earlier you had an example where you actually used two retracement level from two different time frames.
Yes.
For example, we have the 786 on this 3 minutes.
Yes.
But when you look at 15 minutes or 45, do you do that too?
Definitely, it's essential. I just have this chart up so we can have a visual representation to talk about the retracements. Yeah, but otherwise, the whole thing I was talking about, 15-minute versus 3, we wouldn't have a way of knowing where the 15-minute support was unless I had the 15-minute levels done and we're trading into it on the 3 and so on. So yeah, the example, that Russell chart I showed you that had the big, bold 786, that was from a higher time frame. Another reason why you might look at higher time frames is because if you have, let's say you have 300 bars on your 3-minute chart or your 15-minute chart, the really strong stuff might come off the daily. How many 3-minute bars do you need on your chart to get daily swings? So it's a heck of a lot easier just to have a daily chart, run the levels on there. You definitely need to have the levels from different time frames. Sometimes I like to have them all on one chart, like on that Russell chart I showed you. I'll bring them down, I'll go, hey, this shows up better on the 45-minute, but I'm going to put it on the 15, because I wanted to show how that was right on top of the target. Okay, but usually I'm looking at different charts for that, because just for my mind, it puts things into perspective better.
Yeah, just a quick question.
Sure.
You say that the 15% chart would be good when you do a confirmation with 618?
With other levels in general. In other words, the 618 we know is a strong level. We're going to talk about that one next. The 382 is a strong level if you have a good indication that you're in a strong trend.
Right.
All right. So if the 382 had a 50% overlapping it, I'd say yeah, it's probably a little bit stronger than just the 382 alone. That's what I mean by confirming factor. It's nice to see it added to another level, but standing on its own, I don't really give it that much credence or credit.
It's a great confirming factor used with another level.
Yes, exactly.
What time frame would you base that on the Forex?
Any time frame, really. In other words, the 3-minute bounce, if you're trading off a 3-minute chart, if your time frame to trade is a 3-minute chart, you're going to see, you're more likely to see a hold here at the 50% on Forex than you would on the ES, as I mentioned. Okay, if your time frame that you're trading off of is a 15-minute chart or a 60-minute chart, well, then this is all just noise to you anyway. So it doesn't matter if that's holding or breaking. Then you'd be looking at the 15 or 50-minute chart for the idea of it holding. Because if you get another, like let's say you took a short here, and you made some money off this, well, the 15-minute guy or the 60-minute guy or whatever is really waiting for some kind of indication on his chart and doesn't even really notice this swing too much. All right, so that's not dependent upon one particular time frame. The analysis is the same on all time frames. I like to think of it as fractals. The concept of fractals, that whatever happens on a larger chart, larger time frame chart, you can see the exact same patterns and the exact same kinds of support and resistance holds on smaller time frames too. That's like the chart I showed you guys, at the beginning. It's like, what time frame is this? What is the security? The motion, the market motion is the same. Dependent. It's the same no matter what the time frame is. So yeah, again, the 50%, I wouldn't even be that wild about it standing alone on a Forex chart. I just know it's stronger than it is on some of the other securities, right? Like gold, for example. Trading gold, if you get a 50% level alone on the chart, delete it. It's not going to pay any attention to it, in my experience. Now, that might change in time. That's just the cycle where it's been for the last 6 years, is a 50% level, and that can be on a 15-minute chart, a 60-minute chart, or a weekly chart. If you only have a 50% retracement on gold, It's not going to do anything, in my experience. Okay. The level, the retracement that most people focus on is 618. Okay, 618 is, you you go out there and you get the most basic. You know what? At the supermarket, they sell you, how to cook for your cat. Little guides at the checkout counter, or your horoscope, or whatever in those little booklets. Well, when you go to the supermarket, they have Fibonacci for dummies, and this is going to tell you, look at 618. That's the basic retracement that everyone talks about. 618 in a trending market. In a trending market, 618 is the most likely level to hold. Okay? It is very likely that you will get a hold at 618. It is a lot more likely if you can get some overlaps with it. Overlaps meaning retracements from other swings. Overlaps meaning symmetry. In other words, we're looking for a reversal at 618. But if we also had symmetry resistance there, telling us that prior corrective bounces terminated at exactly the same point, it amplifies the strength. It's a good level, 618. It's a very important level. And again, in a trend, it will tend to hold, a lot of the time. This is where people go, okay, well, how do I know if it's going to hold or not? That's why we look to momentum indicators and so on. Is it trending? Is it not trending? My favorite level, my favorite retracement. Oh, question. Yes.
About the 618, one of those gurus that I mentioned before, the only you see after the 618 level is if it's broken, then the trend is over. You're not really in a trend.
I couldn't disagree more.
Really?
Yep. I couldn't disagree more.
If it goes through the 618, you're still in an uptrend, let's say?
That's quite, well, that's my favorite level. That's the strongest level on the chart.
So it's the best place to say that the trend is over.
If it breaks.
If it breaks.
Yes, we're seeing this a lot. A lot of the time on currency. Now the thing is, that doesn't necessarily mean that you want that level of noise. If you break the 618, you can't say that you're still necessarily looking for shorts all the way up here. Maybe if it holds and it starts to go down again, you are. But I mean, we see it time and time again on the currencies, on bonds, somewhat on the stock index futures, where what happens is you get a short, it bounces, it doesn't make targets. We'll have a 1272 down here. It doesn't make targets, it retraces all the way to the 786 and then fails again and makes the initial target. What I hope to be able to show you guys tomorrow is how to determine the likelihood. This is some of the real power in the way I've combined this stuff. I can show you the likelihood of that level holding if tested. Okay, and that's worthy of a little bit more time than me just spotting into it right now. That is a very, very strong concept that I'm going to show you. The 786, what it means, how to determine trend once it's tested. Is it going to hold? Is it going to break? You know what I'm talking about, prior support break, 786 cascade. Gary is with me in the chat room all the time. Yeah, I'm pointing at you without the laser because I didn't want to put out an eye. What's that?
For me, I'm not so sure when it's a spike or when it's a body in the 618. Is there a difference?
Spike or body?
No, when you have a spike.
Okay.
As opposed to when you have a body of the bar.
Oh, you mean when is it broken?
Yes.
You need to have, the only way I've found to do that is to have a certain number in mind of what it constitutes to violate a level. A spike through, I consider it violated. What I do instead is I have a number of ticks to use. Okay, currencies, intraday currency charts, 3-tick violation. I don't care if it's, if it's spiked through, because if it's spiked through, well, I still have my 786, which is more important to me anyway. There'll be something else that'll catch the price. Okay, I don't care if it's spiked through or moseyed through it really slowly. You need to have a tick rule for violation. ES, for example, 2 ticks. 2-tick violation intraday. YM is 3, and so on. And this is from trial and error and observation over a long period of time. Bond is 2. All right, so that's how you do it. Unless you found that doesn't work for you for some reason. That's the way it works for me, because I can't go to the chart and say, hey, did this break or not because it broke because of news and it spiked through. If it's broken, it's broken. That's the way it is. And if it's broken and you have other stuff behind it, you have the other stuff anyway. You know, that's the way it works for me. If the 786 breaks, I'm looking for the 1272. By that time, even if it were a spike, I'd have support to see on a pullback if the support's going to hold. Okay? Does that help? Okay, that's what I found is helpful to me. Again, if you have another way of looking at it, that's fine too, or as long as I'm understanding. Oops. Okay, 786, really, really important. That's what we're going to spend some time on tomorrow as well. But for now, what I'll tell you is that is the level that determines trend and determines follow through. In my book, anyway. You will see time and time again it will pop up and fail there on just about every security. I really can't think of an exception to that. But if it breaks, then we're looking at making the 1272 target, like on the charts I showed you earlier. If it breaks, we're talking about rallying to this target. Again, it might not be whoosh, it's not, it breaks and it runs to the target. But if it breaks, you are likely to see it make the target, and you're going to want to focus on trying to hold that trade to the target. All right? And 786 is one of the few levels where it shows up on my chart, and I will leave it standing alone with nothing else there, because it is that important.
As a summary, if you were short starting from the point at the top, and then you see that the trend is going up as opposed to go down.
Right.
At what point would you get out of it for sure?
Symmetry break. Here, I'll show you. This has nothing to do with the retracements. The retracements are more to evaluate when to get short in a case like this. When I would get out here, I'll show you. First of all, if you're saying I was in the entire time, here, this is what the resistance would look like. So you can, the resistance I would be focusing on for getting out of the trade would be the symmetry resistance. If I wanted a tighter stop, let's say I was short from, let's say I didn't catch the whole thing, and I was short from somewhere in here, well, then I would use the tighter symmetry resistance, a break of this, to exit. You see that? Low to high projected from low? That's telling me that the downtrend is in jeopardy. The largest bounce on the chart, though, is in here. I might not have I probably did grab the right low to high, but it's this swing up from here, so your last resort would be this guy here, when that breaks.
And at the end of the signal there, on the right side.
Here?
I don't know, the trend itself.
Yeah.
If I wanted to know what I believe the next will be, the next
movement. Okay.
How would I proceed then?
Here, this is, we know we've broken resistance, right?
Yeah.
So here, when resistance broke, it formed support, okay?
Yeah.
Support did not break on the way down. And here, wait, let's add some more stuff to this. Oops. Low to high, retracements. So now we have symmetry support and a 618, and probably here, low to high. Well, look at that. Now we have 618, and by the way, I didn't rehearse this in advance, but that's symmetry, 618, and 786. That was all projected from this high. So in other words, on a pullback or on a drop, let's say you were wondering if this is going to go short again, all this stuff was on the chart back at this high. So if you did have a reason to take a short, you'd know this was in your way big time. Big obstacle. And if you wanted to know, if you're looking for a long, which I would be at this point with it, because the resistance broke, support held, you look for a long at this point. For me, yeah, there's a CCI trigger on this chart. I would want to see what the higher time frame is saying also, of course. But there is a long trigger here. Now let's do our high to low. Okay, and this is, it looks like it broke the 786. See what I mean though? It broke and pulled back. That's why you don't necessarily want to take a long just on the break of the 786. 49.06 high, yeah, it broke exactly. For a short-term Euro chart, yeah, I would consider that a break. So I take out the 786 and we're looking here for target. Okay? Yeah. To stay in the trade, what did I say about the 786? The 786 should hold if you're going to see the trend maintain, right? So if you had nothing else to use, you could have a stop right under that 786, right there. Because if this is going to follow through to target and not turn out to be the exception to the rule and fail after breaking the 786, then it shouldn't break the downside 786. So you can use this as a stop. So we had a resistance break, support hold, long side trigger here, and now we have stuff to trail with. So that's a quick, that's a quick how it all works together kind of thing. Okay? And again, I want to go through that kind of thing on different examples, different time frames tomorrow, so we can have that kind of stuff that we're, as examples, and we also will have stuff set up for what we're going to look at on Monday. Live. In other words, we will leave those charts set up in a way that we can just pick it up on Monday and see what the results are live of tomorrow's analysis. So back to real life here. So once the 786 here breaks, we should see the 1272. 1272 is a target extension. And then, yes, the next target is 1618, but I want to go into looking also at what's on the higher time frame, because if there's something between 1272 and 1618, it might stop price. Okay? Doesn't mean a thing to me. It's in the back of my mind, possible double top, double bottom. That I also have in the workbook later on tomorrow. I'm going to show you confirming a double top, double bottom, which is relative. That's part of my category, what I call stupid fib tricks, like stupid pet tricks. Letterman, I thought that was funny, but yeah, confirming a double top. Yeah, I have that in the corner of my mind. There are example of a security as we know all too well that will often do that is the bond intraday. The bond will retest prior swing highs or lows, and then you always have to sit there and go, is that a retest? And what I end up saying over and over again is, it broke the 786, it's probably a retest and it's going to follow through to the target. So, one of the things that annoys me, nothing annoys me. One of the things that annoys me is when someone calls a double top or double bottom just because it hit the same price. It hasn't even pulled away from it yet. So, yeah, that's definitely a factor. Anyway, so that's basically it on the individual fib retracements. Now, what we're looking for, though, is more combinations, the combinations when they line up together. Obviously, anything that has symmetry lining up with it is reinforced substantially. When you can get something like this that has, you see, not only is this 3 different levels, but it's 3 levels determined 3 different ways. All right? In other words, this is symmetry support, the red line, high to low, from high. It's 618 from the low down here to the high. And it's 786 from a smaller low to high. That's the kind of thing you really want to see in order to base a trade, in order to determine that there's a really good opportunity there. And you will see it very often. Now, other things that you might see will be on a pullback. What if we had a little swing in here and we could look for a target downside, and we went low to high, and you had an extension target in there too? Like on that Russell chart I showed you that had the extension and the 618. Let me go back to that for a second. That's a good example also. Don't close. What did I do with that chart? That's something else. Yeah, this one. It's good support. Pulled back. First of all, we broke the 786, intervening. See this? 786 would have been, would have come in right around here. I don't have it on the chart because I didn't print this out. I didn't put this up here with the idea of showing that concept, but it comes to mind. Once the 786 broke and we pulled back, The emphasis is on the support to hold, because the break of the 786 has us focusing on this 1272 target. So because of that, we're going to want to focus on our support levels. So here we had a 618. Where was that 618 from? Low to high. Okay. What else was with it though? The target of this little low to high, right there. So targets are not just necessarily something that you're reaching for in price. Targets are also used to reinforce support or resistance on a pullback to justify the long here. In other words, I wouldn't have been focusing too much on taking this short. Just because we're calling the extension a target, I'm not interested in shorting here because this pattern and the break of the 786 has me focusing on long side. So I know that it's much more likely that this is just getting itself into position for a better shot at long side. So I want to find any kind of support that there might be to justify that and to prove to me that that theory is working out, that the support is there to hold. So we have the 618 and also the target, not that I traded to it, but it says if this swing is going to end, here is the place for it to end. So that's two different types of analysis coming together, low to high and extension. And they both overlap there, and that's where it held. How did I know it was going to hold at that point? I didn't. I didn't know it was going to hold. I knew that is where I would like it to hold. It might have made it down to the 786. Broke that 786. That's why I had this one in bold on the chart at this point. I had that one in bold because I was like, you know what? Broke the upside 786. 9 times out of 10, the downside one is going to hold. So I would be willing to look at a long all the way down to this 786. Closer level held instead. What do you do as you approach those levels? You look at your triggers. Is something setting up for long side momentum to come back into the market? Okay? Yeah.
If you took a long position in the first move, would you put a stop in the 618?
I would probably, here in this part?
Yeah. If you took a
you could. You definitely could. Again, that depends on your time frame that you're trading. If this is the Russell, and frankly, my pockets would make me kind of scared of that pullback there because that would be giving back a lot on the. Are you familiar with the contract?
Actually, yeah. I know.
Okay, so yeah, it depends on where I mean, if I entered somewhere in here, that would be a pretty deep pullback. What I would be doing, first of all, what I would be doing here instead is I'd be looking at my indicators to see if it was going to rally through. But I'd probably be on a shorter term chart. This is a 15-minute. I'd probably, unless I had really high time frame long side triggers. That's another thing I do is I look at specific triggers. We'll go over that tomorrow. But if I have a specific trigger combination on higher time frames, I would do my best to hold it. Okay. But if I was on this based on a shorter term trigger, I'd be looking at my 3-minute support, and if it broke, I'd be out. And that's what happened actually. Well, I wasn't trading this then. I was trading the ES was set up very similarly. But I'd be looking for a re-entry, essentially, on a hold. Any other questions at this point?
Is that the 786 you have open there?
This?
Yeah.
Yeah.
Okay. I'm holding my short-term memory is shut. Why would you hold in a level? Is it usually the 786 technical?
No, it depends. There's different reasons for different levels, and that's going to be easier too when we're constructing charts tomorrow. One example was the symmetry. That's actually the only one I talked about so far. The symmetry I would bold if it represents a swing that had not been broken yet at all. In other words, if you had pullbacks, certain sizes and pullbacks, and they have been violated before, you can stick them back in the chart, but put the emphasis on one that had never been broken. Okay, we'll do it. Yeah. This particular case, it's because we had the 786 break up here, pointing me at the target. So I knew that if it was actually going to follow through, the downside 786 would hold.
Downside 786 would probably be your stop.
That would be a good place for the stop too. Actually, the downside 786 instead of the 618 would be an ideal place for a stop if you can afford it. For me, I would probably be on a shorter term chart.
Okay.
Taking a look. I think I'm getting a signal that the tape needs to be changed. So we're going to take a quick break here.